Good morning, everybody, and welcome to our presentation of our full year results for the financial year ended 2023. Shortly, I'll hand over to our CEO, Mr. Greg Bader, to step through the presentation. Just a matter of housekeeping quickly. Please feel free to ask any questions as we go through the presentation. You'll see there should be a Q&A icon either at the top of your screen or the bottom of your screen, depending on how you've accessed the webinar. We will also be recording the webinar and putting it up online later. With that, I will hand over to Greg.
Thanks, Jan. Good morning, everybody, and appreciate everybody taking the time to join us. As Jan mentioned, happy to take questions. We do have a couple already. But also investors at rent.com.au, more than happy to one-on-one chats and whatnot. I had a look at the list of people that are on the call, and obviously we recognise most of you, and we've already had some chats. So just straight into it. Revenue impact last FY. Look, we've spoken about this in our quarterlies. General softness in the building segment has rolled through to our advertising spend. Pardon me. I guess we'll cover this in more detail as we go through the presentation. The pleasing thing is that we're starting to see some of the results of our focus on diversifying our advertising streams. Product sales largely in line, although we're in the midst of a rental crisis the country has never seen before. So this has had a little bit of an impact on the mix, but once again, we'll cover that in a bit more detail shortly. Look, obviously that flows through to our EBITDA. And also on top of that, we continue to invest in RentPay in terms of marketing and new product development. Just a bit of a snapshot of where we are. I guess we need to be mindful, and to be honest, we need to be a little bit proud of the fact that we are very material in this market. We're at a different scale to our major competitors, REA and Domain, but we matter in the market. We're about 70 to 80,000 properties transact or move each month, so our traffic figures are well north of that. We have the majority of the listings in the country. We're starting to see RentPay impact, 80 million in the last FY. Bunches of products, resumes, and really pleasing, we continue to maintain our position as the #1 rated app in the country. And you can see on the screen there, 40,000 reviews. So it's not small fry. A little bit about us. Look, the rental crisis in Australia at the moment is just, it's unbelievable. And there's a million arguments in the media as to why and whatnot. The simple argument is there's just not enough properties out there. People are finding it really tough. So we operate as our champion. So we have bits and pieces on our website that make it easier to find a property. Obviously, RentPay makes it easy to pay the rent when you're in a property, and we're using technology. But the key summary is here. We see ourselves as the champion for the renters. Look, We've shown this slide a few times. Simply it outlines, I guess, the journey, and the focus for us is to follow our customer from the search phase, where we only get to play with them for 4 to 6 weeks, and once again, only on average every 30 months. So RentPay was the product, if you like, for us to maintain that permanent relationship. Allows us to add value on an ongoing basis, but importantly too, it allows us to place other products and services. You'll see us over the next 12 months transition into the mortgage side as well. We think there is a number of opportunities to help our renters there, and once again, we'll cover that off in a little bit more detail. I guess what's new on this slide is the agent line at the bottom. We're working closely with a huge number of agencies, and the feedback we get is that we're certainly adding value to their own operations, and we'll continue to grow on that. I'll just hand off to Jan to cover off some of the rent.com.au side.
Thanks, Greg. So with that focus on what renters need to help them through the renting journey, we've used our technology to bring in new and useful features like our suburb reviews, our walkability scores and things like that. Every property has NBN availability, and with TPG coming on, we now are showing which properties have got 5G coverage versus 4G, etc. All these things combined have sort of helped build a website and app that renters love. So it is the top-rated app in both the Apple and Google stores. We have, across the course of a year, we have most renters in the country do actually come to our site with about 700,000 per month. And to date, over 1.7 million renter resumes have been created. So building us up into that substantial, well-regarded marketplace. With a tight rental market, how that's impacted us is less properties advertised on not just our portal, but all portals. And how that impacts our revenue is that it just means that there's less renters so while we've maintained the people coming to our site, there's less renters that get into our product funnels. So having said that, we're pretty proud about the fact that despite that, we've actually maintained our renter products revenue. As Greg mentioned before, the mix over the years has changed somewhat. Some years rent checks up, other years other products are up, but together we've actually been pretty consistent in terms of delivering value there. And in particular, we're quite excited about our rent bond referral program that we launched in March. So with just a couple of months in the financial year, it's actually delivered quite good a good revenue for us. Just going into that a little bit further. So we've had inquiries over a period of time from real estate agents looking to offer value to their tenants, etc. But the real catalyst for this was we had two big software providers to the real estate sector make inquiries about this product, and they're both on board now, and we're looking to add further referrers into this. So we've spun out rentbond.com.au as a separate site, and you can see from the chart on that slide there that it's pretty much added probably about another 40% in terms of rent bond applications per month, which we focused on growing even further. The big thing for us from this, though, is that it starts providing more and more scale for rent bond. So we can, as we build that scale, it allows us to access some strategic options in terms of how we fund it, what related products we can provide, and things like that. In terms of advertising sales, as Greg mentioned previously, like this has been where we've seen the biggest decline in terms of our revenue year over year. And partly that is it comes off the back of 2 successive years of around about 30% growth. So we have had strong growth in the past, but with the home builder segment really struggling probably over the last 18 months, that has really hurt us as they've cut their advertising budgets. Again, we're not alone. Other portals are seeing the same impact. It's just the fact that this represents about 50% of our revenue at the moment, that the impact is felt probably bigger on our side. What it has done, though, is it has focused us on broadening into our customer base into new segments. So where before there was a heavy reliance on the building segment, we now have brought on a telco partner. We've accessed other groups that we wouldn't have ordinarily considered, but who all see value in our predominantly under 40-year-old professional audience. And so that is, we're starting to build and go from strength to strength there. So we expect to see a turnaround start on that advertising sales going forward. I'll just hand back to Greg on RentPay.
Oh, thanks, Jan. So we're just on the first of the RentPay slides for tenants. But this is our bread and butter. So the concept of RentPay hasn't changed. We're a two-sided marketplace. We're the first in market where tenants can choose to use RentPay, and we operate transparently back to the agent. The other side of the marketplace is obviously we partner with agents that position RentPay as their preferred payment method for tenants. So on the tenant side, the more ways to pay. This one's really interesting, and it's a changing landscape as I guess the banking rails in Australia mature. But even over the short time we've been operating, we've seen substantial change with instant payments coming in. We now, I think I should have this stack in front of me, but we're about 20% of our payments now are instant payments. So that's replacing direct debit. Credit cards is really interesting, and with consumers joining RentPay off the street, so to speak, we're up around 35% of people choosing to use their credit card to pay. Now, we're one of the lowest in market in terms of the credit card fees, and we don't make a margin on that. It's under legislation. We need to pass that cost through. We're working with our providers at the moment, including the card people, and we're looking to lower our credit card rates even further and provide some pretty interesting opportunities there for customers. So pretty excited about that. Obviously, later in the year, we'll have Pay 2 coming in, which allows us to operate a scheduled instant payment, pulling into the wallet. That will, I guess, be the final nail in the coffin for direct debit and its 3-day delay. Cashback on utilities, our partner with Origin. Love this product. It's just a classic example of everybody's a winner. Customer pays more frequently their utility bills, so they avoid any bill shock. Origin gets a benefit of, obviously, from a cash flow perspective, but more importantly, customers not having big bills means there's less arrears, there's less bad debt, etc. And in return, the customer gets $5 a week back into their wallet. So you cannot consume gas and electricity in this country cheaper than through this product at the moment. And this features heavily on our advertising. Score Builder, only once in market, first in market. Pay your rent regularly, will increment your credit score. The concept behind this is really simple. Your time spent renting should mean for something. You should exit renting in a better position than when you entered. And now, look, not everybody will transition into a home loan. Not everybody will rent for 1 year, 5 years, 10 years. So the product's flexible, but it does good, and we're really proud of that one. On the agent side, we've actually spent quite a bit of effort over the last 3 to 6 months building out the agent side. It operates like as you would expect. There's reconciliation, there's pay files, there's portals where agents can go in and create tenants and automated. We've done time and motion studies. We know this works, and we're actually starting to improve our traction with agents. We recently attended the Property Manager Conference, had a lot of great chats. There's a lot of follow-up happening there. An interesting, I guess, a spin on this, we've had 2 agencies approach us in the last 2 weeks, and what they're finding is that with all these new payment methods in market, they're getting more and more demand from tenants. So we're actually working with these two agencies to position rent pay alongside their preferred method. And anybody that wants weird and wonderful will use rent pay. If you just want to stick with vanilla direct debit, then you use their existing system. Obviously, from our point of view, we get our foot in the door, and we expect over time that we'll pick up all that business. So that's an interesting, I guess, adjacent model, something we're pretty happy with. We've spoken about the size of this market, and this is the key reason we've got into it. There's 2 big variables for us. There's obviously net number of customers, and we report that each quarter, and then there's ARPU, which we're also reporting. So we need to work hard on both of those. This is our main focus at the moment. So ARPU will come from adding in more services and product. We can't just bump up the price of rent pay, because we're just moving people's rent money around, and quite reasonably, there's an expectation that there's not a lot of cost involved in doing that. So once again, our growth in terms of ARPU will come from other products and services and partners. The net focus, of course, is on customers, and we had a pretty good quarter last quarter. As I've mentioned previously, a couple of new agencies coming on board and more efforts going into that. And you'll see some actual marketing effort around the agent space coming up in the next month or 2. Active rent pay customers, we straight from our quarterly, we want to be 10,000, 20,000, 50,000, and we're focused on doing that. It's not a small thing for an agency to switch over, and that's why the hybrid transition model will be appealing for some agencies. But that said, each week we're signing up a new agency and moving customers across. It is some agencies use rent pay as an acquisition tool to align and unify their customers on a single back end. Other agencies wish to take it very slow and offer it as an additional product. So there's a real mix and match in here, and we're working with all agencies on how they prefer to migrate. ARPU I spoke about, as said, Score Builder and Bill Smoothing are two existing products in there that contribute to ARPU growth. We're working on Mortgage Builder. I love the concept of the product, and like anything, there's several different ways to achieve the result, and we're working through those options at the moment. This is an important slide, and I guess wouldn't mind taking a little bit of time on this one. One of the challenges with rent.com.au is everything we sell on Monday, we need to sell it again on Tuesday. So the business from a revenue and earnings point of view is very subject to marketing cycles. And we saw that in our advertising revenue and the hit in the building segment. So moving to an annuity style income is really important for our business. And you can see the impact of rent pay over the last year or so there. Obviously, as we grow rent pay, that percentage will increase. So this is a really good slide and just illustrates why we're doing what we're doing. Just on the mortgage product, this one's I thought it might be an opportune time to probably explain a little bit more what we're looking to do here. The two biggest barriers for someone getting a mortgage right now is building a deposit and then demonstrating that you can service a future loan. So imagine a scenario where a customer comes in, and we got various tricks and tools, future house price, etc. But we can calculate your future mortgage will be. We take into account your rent, the balance we put into a high interest savings account, and grow your deposit, and various reporting to target type tools and features in there to almost gamify your savings goals will be part of that. The interesting bit or the challenge on this product is how do we give the customer a high interest savings? Now, there's a few different ways to do this. We could simply partner with a bank and have interest. But I guess we want to be a little bit different, and we want to offer our customers a higher than market rate of return. The other extreme of this is with Rent Bond and our efforts to take Rent Bond more broadly, we're increasing the size of that loan book substantially. So is there a model where we can use customer funds to supplement Rent Bond, lower the cost of capital on Rent Bond, and give a return back to customers? Sounds simple. There's a whole world of legislation around this, requirements for a full AFSL. We've done a lot of work on this. It is, I guess, simply comes down to a spreadsheet. At the end of the day, you need a certain scale to cover your fixed costs. And that's what we're working for at the moment. But the concept still stands. And as I said, there's the challenge or the tricky bit in all of this is how to maximize the rate of return for customers on their savings. And that's something we're working through. We expect this product to be out over the next few months. As I said, there's some not insignificant legislative requirements, and we're also working with a couple of partners on this to take some of that requirement off us. So just finishing up, good rent pay growth, great efforts on the diversifying our advertising revenue. We've got TPG Telecom coming on, and this is one of the. I just want to pull out on the TPG one for a second. We have certain advantages of operating rent.com.au portal. We're geographically based, of course, and we're down to a house level. So one of the challenges with 5G, and this is not just TPG, it's Telstra, Optus, etc. as well. One of the challenges with 5G in Australia at the moment is that the coverage is not everywhere. So to maintain a satisfactory level of customer service, the telcos want to SQ or service qualify down to an address level. And that's what we're doing with TPG Telecom. So that's really interesting. What's interesting from a renter's point of view is that we're at price parity now on 5G versus NBN as a fixed line replacement in your house. So we're talking $60 a month for, unlimited 5G type products. From a renter's perspective, not having to worry about connecting a landline, not have to worry about sharing what is kind of a household product. This can be your own product. So there are a lot of advantages for a renter. The cash burn, we've slowed. We're reducing spend where we can. Our marketing, we have been trying and doing pretty good in lots of different areas. We're tending to probably focus back towards Meta, which is Facebook and Instagram. We still do some Google advertising, and certainly SEO is a big part of our business. Rent.com.au is a fantastic platform for introducing people to RentPay, and with its high volumes of traffic, it'll always be our key advertising channel, if you like. But more work going on in that space, and we're getting better and better. We've got CPAs coming down to well below lifetime value, so we're at a point now where it's starting to make sense. So yeah, we're pretty happy. We're pretty bullish on where we're going forward. We've got lots of opportunities. And I think last time I spoke, we talked about just the profile of our business. We're starting to have conversations with key organizations as we move forward that, around rewards, around advertising, etc., that we probably weren't entitled to have 6 or 12 months ago. So yeah, focus on RentPay, focus on RentPay growth, obviously continuing our good work and diversifying our income, advertising income on the rent side. And yeah, we're just going to strap in and head down, bum up for the next 12 months. We've got we do have some questions. I don't know sure how you want to.
Just a reminder, if you do have any questions, if you could put them through on the using the Q&A button at either the top or the bottom of your screen, depending on what Zoom app you're using, and we'll go through and do that. So we've got a question from Michael regarding with RentBond growing, how is the revenue structured versus loan book, and is the revenue paid over time of the active loan to the customer? And also, are there any targets with the loan book growth? So I can answer that, Michael. So we do currently receive all the revenue up front. So what we do is we don't take any of the credit risk. We don't make the actual lending decision, and we don't have any of the responsibility in terms of following it up, which obviously is where some of the cost lies. But what we do is we're the customer face there. So we get remunerated when a customer signs up. So it is all upfront. Look, we're currently doing around about $1 million a month in terms of rental bonds. We'd like to see that grow to sort of 1.5-2 times that over the course of the next financial year to 18 months. A question from Dale. How much input does Bevan have towards strategy?
I can answer that one. So look, Bevan's been a shareholder for a couple of years now. He's our largest shareholder, and personally, I've known Bevan back from the pipe days. Look, Bevan doesn't have a lot of input into day-to-day on our business. When Bevan first came on as a shareholder, we had that discussion, and to be honest, I wouldn't wish Bevan's calendar on anybody. He just simply does not have enough time. So he invested in RentPay because he likes Australian businesses, he likes tech businesses, and he sees that opportunity in the renting space and the fact that it's especially around RentPay. So on a day-to-day basis, minimal input at all.
We also have a question from Finola. Hi, Greg and Jan. Could you comment on the categories of advertisers that you would be looking to bring on board?
Yeah, look, Jan runs our advertising, so I'm going to speak on behalf of him. Yeah, we don't see ourselves as a run-of-the-mill advertiser, and what we like to do is we prefer a partnership type model, and even to the point of segment exclusivity, like we have with Origin, like we have with CPG. The reason we do that is it's a way of amplifying, if you like, our what we can bring to the table. When you're a little guy playing with big guys, getting the big guy to do anything is a real challenge. So one of the focuses we do is by offering something a little bit different that they can't get from your generic channels. So I think banking is a really clear channel. In the rewards side, the pressure on renters and the pressures on cost of living, there's certainly some opportunities around that side with some of the major retailers, and there's something we're exploring. But yeah, I hope that answers the question there.
Fernando, we've also seen, I guess, as I mentioned, just some left field ones, like some of the food delivery services and things like that. So people tapping into, I guess, the sort of the lifestyle choices that we're seeing a lot of people make around having that convenience, and they recognize that that a segment of our audience is really made for that. So these are the people that are renting because of lifestyle and convenience. They do have disposable income because they are generally young professionals, or they are young families with I guess not a lot of time, but with some disposable cash. So we've broadened out into some of those, and then also we've got a number of government departments that are seeking to access, I guess, different segments of our audience around affordable housing, targeting landlords for example, for defence housing, etc.
Yeah, and thanks, Jan. And just a couple of other points. So we know the sort of person in every different suburb. We know income levels, marital status, all that. So there's some really good targeting opportunities. The other thing too is, and I'm going to mention Domain only because I know their data. Domain run at about 21% new users every month. So out of all the people that go to Domain over a month, about 20% of them are new. The rest are mums and dads checking out each other's houses for sale. On ours, we're up around 70%. So that in terms of unique UVs coming through over 1 month, 2 months, 3 months for an advertiser, it really amplifies our traffic substantially.
We'll just cover some of the questions that have been emailed in. So we've got a question from David. With the peer-to-peer loan financing, can this cover more than just the bond, like furniture and things needed to make a house a home?
So we're working with our partner with RentBond. Once again, can we bring in customers' savings to lower the cost of the loan, but also give a 6% target return back to consumers? RentBond already covers more than just the bond and covers the first 2 weeks' rent, and you can up it a little bit to cover your moving costs as well. So the concept of loaning more than just the bond is already there. The concept of using the peer-to-peer side where renters help renters is something we're working on, and that'll initially manifest through our mortgage product.
We've got a question from Andrew about the marketing, but I think you've actually already covered that in terms of the focus on social media and rent.com.au. A question from Isaac. Would you consider becoming like an Airbnb for rental properties where you do the booking direct rather than via a real estate agent? And why do you think no one else has done this?
So this one's a really, really long answer. So I'll be brief, and I'm also conscious we have John on the call as well. So the challenge with us, so we operate in the middle between an agent and a tenant. So for us coming in and competing directly with an agent, that's a significant strategic change for us to do. So certainly it would have impacts across other parts of the business. We already offer landlords the ability to come in and list a property. What we don't have today is the ability for a landlord to self-manage their property, if you like, a cut-down property management type platform. We are looking at that. It's on our pipeline. It's just not our highest priority. And to be honest, it's probably more likely we'll partner for that one, someone that already does that. There is already quite a lot of operators in the buy my place, rent my place type space, and they do a great job. So it would make more sense to partner in that space. I hope that kind of answers the question. It's similar in concept to the sharing side of it. There's no doubt there is a market there. Is it just the right thing for us to do, given how much we've got on our table, is more the question.
Another question from David, but I think, again, we've answered this. It's in a previous update, you mentioned a telco partner aspect of RentPay. I think that was referring to TPG as an advertising partner rather than a RentPay partner. A question from Phil. You look likely to run out of money unless you do a capital raising. Do you have any plans regarding this?
Constant source of conversation with our board. Look, we've got about $1 million in the bank. We've got an R&D refund that's been approved. We're minimising our spend in areas that we can. Around 50% of our cost is staffing. There's operating a payments platform. There is a minimum level you need to maintain compliance, etc. So that's not something we can really reduce. The other opportunity out there, though, is around partnerships. Now, they can just be simply a commercial arrangement or something more. There's, I'm a bit of a believer that there needs to be some consolidation in the market going forward, whether us driving or us receiving. We've got it's a really fragmented industry, and I think for a number of the tier 2 guys to be a tier 1 guy, there is going to have to be some level there. Now, there's been some interesting moves in the prop tech space over the last 6 months. We've seen 3 or 4 prop techs shut down. We've seen some moves with View and Anthony Catalano about to pop out in market with a new pretty heavy play. We saw Domain pull out of the mortgage space last week. So there is a lot happening in our space. So getting back to the question, we do have some options there, and we're aiming for nothing this year.
And Dale, I think that probably answers your question regarding discussions to bring on a strategic partner instead of a conventional capital raising.
Yeah, well, I mean, to be honest, yes, the strategic partner has always been a goal of ours, and as we increase our visibility to others, that becomes more and more realistic. And as I mentioned earlier, we're having conversations at the moment that look pretty promising. I just want to, I should remind everybody that the Origin conversation we had, which wasn't strategic, it's a pretty cool product. The likes of the market's never seen it before, but that was over a year in the making. So these things, when we're playing with big guys, take time. And so, yeah, look, the strategic side of it is really interesting to me. And once again, as a way of amplifying and magnifying our scale and our impact in our segment. So yes, conversations are underway.
We currently have no open questions, so I'll just put it out to everyone. If there are any final questions, we will take them now. Failing that, we might just wrap up. So if there's any final questions, please post them using the Q&A button now. Okay, no further questions have been submitted, but look, we always are available to answer any questions. Probably the easiest is if you email them through to investors@rent.com.au. We'll always try and get back to you as soon as we can on that, and certainly sort of within a day at the latest. Thank you very much, everyone, for your attendance. As I mentioned, this will be going up on our investor site, which is investors.rent.com.au a little bit later today, and the presentation will be seen on the ASX platform as well. Thank you.
Thank you.